Hi there, Serial Trader here. Let's do an update on the major US indices. And looking at the 1 hour chart here on SPX, let's go through the current wave count. And I'll just say since the last video, I've enjoyed a very successful long position on the ES futures. And if you recall, I mentioned that I got in here in the high 2400s. And now obviously we've gone up a considerable amount and almost 300 points, so well over 200 points from that entry that I discussed in the last video. So today I have actually closed that ES position and very satisfied with that trade. And the reason I closed it is because we now have a mature looking 5-wave move off of this BR2 low. Now, this could certainly continue higher, and we could, continue subdividing, perhaps even considerably higher. Although I have my doubts. I'm certainly happy to take that trade off the table here. And really, what we have off the bottom of this either larger wave C or 3, so far we have a 3-wave move up. So this could very well be an A, B, C up. Obviously, if we continue extending and we have more power than it appears we currently do, then perhaps it'll be prudent to lean on this being a 3rd wave and something more bullish in development. But I'm not leaning that way currently. I'm currently now starting to lean into the fact that this may be just a simple ABC up, 3-wave corrective advance, bear market rally, and then we may turn back down here to challenge or take out those March lows. Nothing's written in stone, of course, but right now that's definitely what I'm thinking. Now, I just want to quickly go, before I dial in any more on that hourly chart, I'll go to this daily chart here. And you can see from our all-time high there in February, we've got this big move down. Now, some people I see are trying to call this a 1, 2, and then this 3, 4, 5 down for either a larger wave 1 or A. So they're calling the entire decline from the top to our March low there a 5-wave decline, and I just don't see it. Normally 4th waves are larger, if anything, than 2nd waves, more time consuming. And in this case, the 2nd wave just stands out way more than whatever supposed 4th wave you might get out on this chart here. And I think it works well on this daily chart. You really don't see a proportional 4th wave rally down here that'll match up with this, 2nd wave, if that's how you want to label it. So I think this still best labels as an ABC down. Or if we do fail below this 4-1 overlap area at 28.55, as long as we fail there and turn down, then this could also still be a 1, 2. This was all of 3. This is ABC up for 4. And then we turn down in 5. Again, as long as we do not violate that 4-1 overlap rule, which we have not yet. And if we fail near current levels, that will be a perfectly valid interpretation. But what I'm kind of thinking here, either way, is since this does look like a more distinctive 3-wave decline, and let's say we do push a little higher here and get some 4-1 overlap but then fail, well, does that mean that, this is ABC down and we're just going straight back to all-time highs? No. I think it would lean into a potential double zigzag, WXY scenario, and that's where we'd be ABC down for W, ABC up for an X, and then you'd need another 3-wave move down in a Y wave. And let's get the degree correct on this. So that would be, I guess we'll call it intermediate degree. Okay, so yes, potentially that whole move down from the all-time high to our March low, we'll call that potentially wave W. And then this rally we've been in currently, perhaps that is perhaps that is a wave X. Okay, and then we'd be looking for a decline to new lows in wave Y. So that's kind of something I have in my back pocket as far as explaining this being a 3 down and 3 up. But again, no need to get more complex. As long as we do fail below this horizontal yellow line I have here, that 4-1 overlap area. So as long as we fail at or below that 28.55, perfectly acceptable to label this a wave 4. And in this case, the wave 4 would be considerably larger and more time consuming than wave 2, which is actually what you'd want to see in a typical wave 4. And then another move down for a wave 5 would work just fine for this to be a 1, 2, 3, 4, 5. So that's kind of how I'm looking at this bigger picture here on this daily chart. Now I think, so multiple scenarios kind of favor us going down to check those March lows, okay? And potentially break them in a big way. And there's really only one scenario, which I think is lower probability, where, you know, the lows are in and we're heading back up to a new high. I highly doubt it, but there is still that potential. So in that scenario, that would be our, let me get rid of this wave 4 label here. In that scenario, we would need to go considerably more in this current up wave we've been in. Okay. And then we would need to have another little fourth wave decline, again, not overlapping with that level from before. And then another 5-wave move up like that, you know, possibly to fail below the old highs or exceed the old highs. So something like this, only something like this could convince me that, you know, the ultimate lows are in place and, you know, we're resuming the bull market, which just doesn't seem probable, especially given that, you know, there are serious economic problems happening right now in the world, and I don't think they're going to go away anytime soon. And even when they improve, I don't think they're going to improve, you know, with the flip of a light switch. So to me, this is the lowest probability scenario, although still possible. Far more likely, I think, is that we put in a top here fairly soon, possibly right away, and we roll over for another leg down. That's what I'm leaning on right now. Okay, so we'll put these to the side. So basically, I currently think that this rally we've had off the lows is either a fourth wave or an X wave, and again, doesn't really matter directionally. They both imply a move down once we terminate this up move. Okay, so that's really what I want to go through there on that daily chart. Now on this hourly chart, finer detail, right? What I do like is it looks like we have a very mature looking sequence. So we got our 1, 2, 3, 4, 5 up for, let's call it wave A. We have our ABC down, expanded flat for a wave B. And now it looks like we have a 1, 2, 3, 4, 5 up. And this fifth wave could certainly go a little further here, maybe tomorrow. But it certainly looks mature for a larger wave C, which is possibly a larger wave 4 or X, depending how we label things here. Now, even on this, if I go in on the 15-minute time frame, and we just examine this fifth wave here, okay, even this, within this wave, I can count a smaller, so we got our 1 up, 2 down, there's our 3, 4, and 5. And let me just get the degree down where it needs to be. Subminuet. Okay. So you can see kind of why I was motivated to close those long futures, because we have 5 waves up off the, you know, that pivot we had last week. And within the fifth wave of those 5 waves up, and they all look nice and proportional, this wave 4 certainly looks proportional to this wave 2. And actually it follows the guideline of alternation quite nicely. So this was a little expanded flat wave 2. So that's considered a more sideways type of corrective move. This is a nice simple ABC down zigzag wave 4. So that's sharp. So you had a sideways wave 2. That suggests with the guideline of alternation you should have a sharp wave 4, and we did. So this tells me this is probably the final move up in this sequence in a wave 5. And within that wave 5, I can count a clean 5. So that tells me, at least in the very near term, some sort of top is likely. And it could be a significant top. And I kind of, suspect it may be, but one step at a time. Okay, so that's really what I wanted to show there as far as my reasoning for why a top of potential large significance could be close at hand here. Now, obviously, the expectation after this, whenever we form our high, will be something impulsive looking to the downside like that, right? And yeah, like this. So we'd be either, if this is a wave 4, this overall move up is a wave 4, we'd be looking for a 5-wave sequence down to finish, wave 5 below the March lows. Or if this overall move up is a wave X in part of a larger WXY pattern, then we would be looking for some sort of 3-wave move down to a new low below the March lows in a wave Y. Either way, though, directionally, it suggests the same thing, right? So this is what I'm seeing here as far as the wave count goes. And I think we've, gone through this enough. So let's go to the Thinkorswim candlestick chart. And okay, so we're getting into the overbought condition here on our oscillator. So that's certainly a reason to suspect that we're going to run into some problems here for the bulls. We do have the death cross full in effect here. So the 50-day simple moving average has crossed below the 200-day. So we got that bearish technical condition now in effect. And what else do we have here? No candlestick reversal signal yet. So if you want to be more conservative, you can certainly wait for a sell signal and a close below the daily T line, which we don't have yet. And I also like that we have a gap down here. And actually, so far we have an island reversal area here. Right like that. And island reversals are nice little chart patterns. That's basically, in this case, it's a bullish island reversal. So you had a gap down, an area of congestion, and then a gap up. And then these two gaps have no price activity in between them. So this little 3-day sequence is an island of price. In this case, a bullish island reversal to the upside. And we certainly had some bullish action after that island gap up. But that doesn't mean we're going to keep going up. Okay? So to me, most gaps get filled on the indices. And we certainly do have a gap up here. And up here, of course. But that's really close to all-time highs. But this gap up here, if we get a little more exuberant here to the upside, we could certainly fill this gap, which would come into play at, let's just call it 2900, 2901.54 would fill that gap. But I'm kind of leaning that this gap will more likely get filled than this gap, but we'll have to see. Now, before I go too much more into the charts here on Thinkorswim, what I want to look at is a suggestion. Now that I'm out of my bullish futures position, I'm not quite prepared to put on a short futures position because I'd like to see a little confirmation before I do that. But what I am looking at possibly as early as tomorrow, and let's see here, I want to look at the July 17th SPX option chain, and I want to look at the 2500 strike puts. And let's see here, 2500 strike puts. Maybe I'd pick up a couple of those. And they currently are trading between $125 and $127 per share per contract there. So let's just analyze this. Okay. And looking at the risk profile, let me blow this up here. Okay. So let's say I get long 2 of these contracts. That'll cost about $25,000, give or take. So that'll be the max risk of the position, and it's good until July 17th, so 100 days to expiration. That's going to seem like an eternity in this market. 100 days, over 3 months. But, so let's say we go down there to 2,000, just make a marginal new low. That would make, between $75,000, $80,000, something like that. Let's say we go down to 1,700, you know, $130,000+. And your max risk is 25,000. So in this case, the risk management is just simply the position size itself. I mean, if you're nimble, you're not going to let your options just melt away to zero and take the full loss. But let's just say that happened. Your risk reward here is still, you know, incredible. So as long as you size the position where you could be totally okay with observing the entire loss, like let's say the puts, you allow them to expire worthless. Let's just say you did that. Just choose a position size where you're totally okay with that, and then you know, you've still got a great risk reward ratio. Either you lose the whole position, which again you still shouldn't do if you manage to trade properly, but just pretend you did it. Just pretend you let it go to zero. Make sure that number is acceptable to you, and then you've got a great risk reward for what could happen here. I'll quickly navigate back here to the trading view chart, and I just want to propose something here. So let's say we're going to do so if we got let's just say we have a larger wave 1 down or W down. Again, I'm more leaning towards it being a 3-wave down for W. And we got our wave 4 X move up here. So let's just do some relationships. So this move down, projected off of this move down. And again, this is assuming that we've put in the top today, which, you know, no reason to believe that, but let's just pretend we did. Just a 618 relationship. So let's just say this is a WXY, a 618 relationship between Y and W against 2018, so right around 2000. And a equality relationship between Y and W, again, if that's the correct pattern that we're in, will get us down to 1559, so under 1600. So just to give you an idea, if we do fail here soon and head down for new lows, these are two very, you know, viable levels as far as, you know, the wave relationships go. So let's just call it from 1600 to 2000 as potential downside targets if we do roll over. If, right? Okay, so I just want to show that. Now, so those two targets, so if we get to that initial target around 2000, again, between 75 to 80,000, we'll call it, from a $25,000 position, max risk 25,000. That's a good risk reward ratio. It's an excellent risk reward ratio. It's roughly 3 to 1, maybe slightly better than 3 to 1. If we go to 1600, that other technical target, that gets us closer to 150,000 from 25,000. I mean, that's a phenomenal risk reward ratio. Much better than the 3 to 1, which in itself is still decent. So that's the kind of position I'm looking to put on here, possibly as early as tomorrow. And again, for me, the appropriate size, probably 2 SPX contracts, which is the same as 20 SPY contracts, okay? So an equivalent SPY position would be the July monthlies, the 250 strike on SPY. And in this case, I'm looking at SPX, so that would be the 2500 strike. But anyways, you can size that to your risk tolerance and your you know, account size and all that, and just make sure that the entire loss of this contract wouldn't be a problem for you. So pick that as a position size, or whatever trading rules you have as far as maximum position size or risk. Put that on, And if this bearish scenario plays out, I mean, you're going to have a phenomenal risk-reward ratio. You're going to make multiples of the initial position size if it works. And if it doesn't work, you know, we move on. There's always another trade. But I think this is a pretty decent looking setup here for a bear play. And upon further confirmation, I would certainly be looking to short some futures too. But with futures, I don't want to put on a position until I have a really compelling reason to do so. I need a little more confirmation. Whereas with the, you know, going long an option here, long some puts, I mean, I don't care if it goes up another 150, 200 points before it rolls over. I can sit through that easy with the puts because the risk is capped at what you paid for them. Whereas on the futures position, I mean, it'll just keep going against you, and there's really no limit until you close the position or do some sort of follow-up action. So the risks can get away on you if you get it wrong on the futures and you don't honor your stop. So that's why I'm proposing this position. Anyway, back to the chart. So yeah, no daily reversal yet here on the candlesticks, but we are getting overbought in the oscillator. And of course, we have our three-way move up that I think will fail fairly soon. Okay, so that's SPX. And on the Dow Jones Industrial Average, same idea. We got a three-way move up and no failure yet, but I think we're getting close. Certainly you got the death cross in effect here as well. 50 crossing below the 200. And we are in the overbought condition on the oscillator. And on the composite, NASDAQ composite. And let me just zoom in a little bit more here. Again, not quite there at the death cross. So the NASDAQ, again, technically speaking, it's just showing a little more relative strength. But very much the same idea. We have our initial move down. Looks like we have our three-way move up off the bottom. And looking to fail here and then roll over again potentially. Oscillators in the overbought condition. Now let's look at the VIX. Now the VIX certainly not showing any obvious signs of reversal yet. So the VIX is still drifting downward. So we're not really getting any tells here as far as a short-term signal. But you can see, you know, let's just say the VIX, maybe the VIX just did an ABC down here, and we're going to make another wave up on the VIX. Not that I'm a big believer in doing wave analysis on the VIX, but it kind of mirrors the inverse of the market. So that's potentially just like the market did a three-way move up, or is in the middle of a three-way move up. Maybe the VIX, after finishing a three-way move down, will make a move up to new highs. Certainly possible. And on the another thing I like here. So on the VIX VVIX tool, I'll point out the buy signal, as I discussed in the last video, reasserted itself once we got above the blue moving average, which we did. So the buy signal is currently in effect, but we are starting to get the preconditions for a sell signal. So you can see that the VIX here, let's just use this point of reference. So the VIX making lower lows here from that reference point. Now VVIX did not. So we have a divergence here, at least short term. VVIX made a higher low today. And that's one of the preconditions for a sell signal. Okay. So VIX, VVIX divergence. Now once we get above the red moving average on VVIX, which could happen tomorrow potentially, that's step 2 of a sell signal. And then, of course, you'd be looking, yeah, again, get above that red moving average. And then, of course, get back below the blue moving average on SPX, which is currently at 2607.85. And then we'll have a sell signal in effect again. So this thing is definitely, I think, giving us a little bit of a heads up here. Potential sell signal in the works. Not confirmed yet, of course. But I did want to point that out. And yeah, so we only have one trading day left this week tomorrow. Long weekend, of course, which is kind of funny because I think a lot of people are at home anyways and many aren't going to work anyways. But nonetheless, it's a market holiday on Friday. So it could be interesting going into the long weekend. How do people position themselves, especially going towards the close? Do we keep going higher, or do we start rolling over here? Should be interesting tomorrow. Anyway, just bottom line. Happy to close those futures longs. Excellent trade. Hopefully some of you were able to get a piece of that from what I pointed out in that last video. And now I am definitely into tomorrow. I'm looking at those SPX July puts to put on a nice bearish position, even if it might be a little early. We'll see. All right, Serial Trader signing off.